Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo, not the video for the end here in November. It's the 29th of November, and it's still 2022 for one more month. This week is after the holidays, so we had our bullish holiday lift and drift for the market, and this week is a pullback in our rational and expected sell-side activity to start Monday and a range day to start Tuesday. But the weakest market index was the Nasdaq. The weakest sector in today's performance is the XLK. That's our technology sector. Strongest was energy, XLE, and on the back of crude oil being up 2%. Bond market was down 1% in today's session. Let's talk about the week ahead, being that it's the end of Tuesday, and a few things are on the calendar. First, we'll start with a stock that does have earnings in tomorrow's session. That's Salesforce.com, down about 1% today. But in terms of the expected move, Salesforce.com has been a weak stock getting weaker, making continual new 52-week lows through the better part of 2022. It's in a retail sector, it's in a retail name, and if we look in the fundamentals of Salesforce.com, it again is an information technology, but it's mainly on the retail or the sales. And if sales for Salesforce.com are across the board down, that technology company or the retail companies that use it, it's not going to be as bullish as it was earlier. So we do see a weak stock getting weaker, and its earnings will take place tomorrow. Looking at the options, at least the in the money, at the money options, we do see elevated implied volatility across the board. Calls and the puts roughly 110%, which makes that expected move or the earnings-based play, that's 111% implied volatility with a $12 expected move. Now, I did this yesterday's session, but we'll do it again just to highlight what we're looking at toward the end of the session and how to set up a butterfly or some type of trade off the logic of a $12 move potentially to the upside. That takes Salesforce.com roughly to the 163 and 50 cents. But it could be, and very well maybe, a downside surprise. That will take it down roughly to 139 and 70. That's just going to keep this trading range, if we go back a little bit on the chart here, in play. And that in play is roughly 139 at the low and 165 at the high against a broader downtrend. We could say the same logic here for Salesforce.com earlier in the mid-session of 2022. So that's something we'll keep our eye on in tomorrow's session. If you have a position on verticals or butterflies or other trades, you'll be much more interested in these upper resistance levels or lower support on its earnings-based expected move. But outside of that, we'll go now to the market watch. We'll look at the calendar and see that on Wednesday's session, we'll have Chicago PMI will be in play, beige book. That's going to be in play, but as we go forward, Wednesday we'll also have the JOLTS report. We'll have the home sales and information there and some other economic sensitive components. We'll take a look as we get into the later part of the week, which is Thursday, any initial jobless claims, but the PMI, that's going to be in focus, as will the personal income and outlays. All these things are here in thinkorswim on the calendar page, of course, in Market Watch. We'll also look at anything else from the Fed announcement, Fed speeches, PCPI coming up, and Friday will be the jobs report. Keep in mind, Thursday takes us over into December. So we'll have inflationary data. We'll have a look at the monthly jobs report. Are we losing jobs? Are we expanding? What is the labor force participation rate? We call it non-farm payrolls, but we're seeing a potential expectation, or at least a consensus, of an addition of 200,000 jobs. That's down a little bit from the previous month. And the unemployment rate is expected to stay the same, about 3.7%. Of course, we don't want to get too far ahead of ourselves in the week. This is coming up along with any other economic data and earnings from other key stocks. Not a lot on the play. Costco comes up the next week. Oracle, Broadcom, Adobe, and others will be the week after. So not a lot going this week on the earnings as we wind up November. But we will take a look at the S&P. We'll take a look at the SP, or the S&P, which has an expected move going forward of about 72 points. And on the SPX, the broader index, or at least the index itself, the Friday expected move is about $72 from this current session. We can look at each individual day now that the SPX and other products, particularly the S&P futures, it has daily expirations as well. And that gives us a sense of what the market is pricing in for short-term or intraday traders. The big picture does continue a potential sell swing to the downside, which is playing currently down from 4,050 in the S&P, and the SPX playing it down similarly, a little bit under that. And I'm just watching this to see if a repeat outcome takes place with a market that has completed a bear market rally. It's done so twice. This is the third time it's occurred in 2022. Will it be different? The first example took the market back to lows. The second example, again, took the market back to lows. The question at hand and how the year will play out into the next year will this occur again, or will this time be different? These are the same questions we ask at these other turning points. Crude oil did get a lift today, and its key support level, big picture here, is off of 75 per barrel, and that is a sideways trading range roughly between 75 and 90, just looking at that in context. The bond market, right there with the equity market, has had a lift. A lift has taken it from just under 95 to just under 105. Keep in mind that same context here in the S&P has seen its prices lift as well. But will this be another turnaround from where we saw the bond market in the earlier part of July ahead of another turndown? That's a key thing to be watching as we go into December. These are big picture plays. Of course, the rate on the 10-year Treasury note, might it hold support and rally off this 3.7% level? And one more look at the dollar index. Might it hold support at a deep pullback, the deepest pullback in 2022? That will build potentially off of 105. So see, the dollar index at the moment is trading into the upper side, or the above level of the 200-day simple moving average. Just a long-term reference of where the price chart is, and the same point in time. And the other side, the S&P is trading to the downside, or the underside of its 200-day simple average. Nothing significant about it, just noting a turnabout or reference point, and the dollar is on the opposite side of the stock market there. And before we take a look at stocks in play, not a lot of stocks making new highs or lows in today's session, but 3 of them, we'll take a quick look at that, are making new 52-week highs, and those include some retail names, which is, or one retail name, Ross Stores, which had its stock break to the upside. We saw some retail strength in Walmart, not at a 52-week high, but not super far away from it, just under 160. And of course, Target would fall under that category. Not quite as strong as we see shares of Walmart, but it's as well coming up off the lows. The other stock that made a new 52-week high is Merck. Merck is taking up those rally and breaking through resistance. It's continuing new highs. And ABC, not a lot to mention there. But are there stocks making new 52-week lows, given that the S&P was more range or flat today? There were 2 stocks that made new 52-week lows, and in the scan, Medtronics and Lumen Technologies. Seeing that it has a very small market cap, we won't talk about Lumen, but Medtronics did push to new lows, and that is continuing the downtrend. And if more leading stocks show this particular pattern of weak getting weaker, not just 1 or 2 stocks, but a broader mix, which can include Amazon, can include Google, of course Tesla, we'll look at Facebook, and other stocks that could turn and go back to lows. If that's the case, these are names to be focusing on and potentially trading to the short side in the event the S&P, the Nasdaq, and maybe the other indices, they go down to those new lows as well. As always, be careful and safe. This is Corey Rosenblum with the TheoTrade video update for November 29, 2022.